Welcome to Podcasts by the Business Times. In this episode, find out how to protect yourself in the event of disability. This episode is brought to you by Great Eastern.
Disability can occur at any age and without any warning. Looking after a person who has become disabled entails significant and sometimes long-term expenses. But just how adequately are Singaporeans insured against disability? To help us shed more light on this, I have with me today David Yip, Head of Accident and Health Business at Great Eastern, and Willis Lau, Great Eastern Financial Representative and Financial Influencer. David and Willis, welcome to the show, and thank you both for taking the time to join us today.
Pleasure to be here.
Thank you for having us.
I suspect I'm not the only person wondering, do we really need long-term disability care insurance? Most of us probably have a "it won't happen to me" mentality. Just how likely is it that I might become disabled?
If you think about it, I'll just give you three incidences, okay? Three illnesses or conditions. Dementia, a stroke, and a injury, a broken hand, for example. If you look at things in that aspect, dementia strikes the older people. So definitely in our aged society, it is a very prominent risk, especially among the elderly. If you take it to the 40-year-old people in Singapore, then things like stroke definitely come into play. Now, is long-term care young people's concern? Answer is also yes, because injuries that lead to disabilities do happen, such as a crushed hand or arm. So in short, every single segment of Singapore, whether you're young or whether you're old, will need some form of cover for disability.
Could you give us an overview of Great Care Shield?
Sure. Now, the Great Care Shield is a supplementary plan of the Care Shield Life. What does it cover? After a deferment period, it covers the customer against the inability to perform at least 1 out of 6 activities of daily living. So give an example. A few of the activities include things like inability to feed yourself, to dress yourself, or to move from one place to another. Okay, these are just 3 examples, which I think may resonate to people. Now, in the event that this happens, what does Great Care Shield do? It pays a monthly benefit to our customers in terms of a lump sum cash per month. That cash is to help our customers pay for caregiving, because if a person is disabled, they definitely cannot care for themselves. And to access that care in Singapore is not something cheap. It's something which costs a lot of money, either by asking institution to look after you, getting a caregiver to come to your home, or even if your loved one provides that care, there is still a cost, because then that person cannot themselves work, and that person cannot be performing caregiving 24/7. I mean, a person is not a 7-Eleven shop. So they also need to rest, and you ultimately have to pay for someone to care for you, whether it's 7 days a week or just over the weekend as well. So that's how we help our customers cover against disabilities.
But doesn't the possibility of disability occur later in life, say 65 or later? So wouldn't this be something I can blow off until perhaps I'm 55 or maybe even later?
If you think about it, I started with the example that an injury can actually cause a person to be disabled and cannot even dress themselves. So they need help, which means even for young people, that is a risk that they need to be covered against. Now, should I wait until I'm older? Yes, you can. But then you're not being really smart about it if you think about it. You should, at this young age, trade your youth to do 2 things. 1, your youth assures you a low premium when you come in. So you start early, you enjoy the benefits of 1, it's low premium. 2, you're going to get covered anyway. Is the coverage relevant? Yes, because it covers a person, as I said, for injury. As you grow older into your 40s, illnesses like stroke, cancer do come into play, all right? And these are very high incidences. So if you think about it, 1 in 4 of our Great Eastern claims for this product does happen to individuals who are 40 plus minus 3 years. So it is not just an old person's illness.
Still to come, we check in with Willis about what he and his friends are thinking.
And now back to Podcasts by the Business Times, brought to you by Great Eastern.
Willis, let's look at it realistically. You're 36. Peers around your age are building their careers and families. How do you emphasize the need to consider long-term care insurance to your clients in their 30s?
That's a good question. So I think for the longest time, chronic conditions such as high cholesterol, high blood pressure, or even fatty liver has been closely associated with people who are older. But as I age, I also realized that a lot of people around me, including my clients, friends, they are starting to be diagnosed with all these conditions. So to me, I think in today's context, it's not surprising to see this happening because these days, most of us, we dine out more often. I think while we also have to deal with the various stresses in our lives. So I think the constant need of long-term care in our 30s, I think that's something that we cannot afford to neglect. On top of that, accidents can also happen to anyone. Because when you talk about disabilities, it's not just about coming from critical illnesses. Like just now what David has also shared, like with the fracture or the crushed in arm, I think those happens from accidents, Yeah, so I would say that the need of long-term care insurance is also getting more relevant for the younger ones. And there's a reason also why government created CareShield Life from its predecessor ElderShield, and I believe this is so.
MoneySense has recently published a basic financial planning guide on how much one should need for death, permanent disability, and critical illness. With the right life insurance and critical illness plan in place, why would someone need to buy a long-term care insurance plan?
In my opinion, to have a holistic safety net, it comes with different pillars. Life insurance and critical illness plans typically pay a lump sum compensation to the policyholders or beneficiaries in the event of claim. However, these amounts could vary, and there could be times where these payouts may not be sufficient to last for a longer period of time. And for example, in the case of a disability or even a total disability, the long-term care costs associated with this can be significant. And therefore, I think with a long-term care insurance plan in place, it can ensure that the basic needs are still being taken care of, while families may use the lump sum payouts for other greater uses, such as making sure that loved ones are still being properly taken care of, despite the breadwinner being disabled.
So budget-wise, how much of one's income do you think should be allocated to buying long-term care insurance?
I think that's a good one. I think personally, the percentage of one's income to buy insurance should not exceed 15%. I think a range of 10 to 15 will be good. The only exception will be if someone's buying insurance for the entire family. Then I think this 15% could be challenging to manage. Nevertheless, I think for long-term care insurance, it can be funded via Medisave up to the respective limits. And whereas for CareShield Life's premiums, it can be funded via Medisave. So in the kind of work that I'm doing, I'm fortunate that the government allows us to use a cap of $600 Medisave yearly for people who, let's say, they want to upgrade their CareShield Life by getting this supplement. So with this ability to utilize Medisave to fund these premiums, I think it provides a great entry opportunity for most people in their 30s.
So David, we hear you that illnesses and accidental injury can impact young adults as well. But the perception of disability among people is that it is permanent and death is imminent. Do you have some real-life example to debunk this myth?
A lot of people have a misconception that a disability is permanent, especially if it's a road traffic accident. But that's not always the case. We do have a case at hand with our own great CareShield. It was a male, 30-year-old, who actually met with a road traffic accident. It was quite a bad one, suffered multiple fractures, and was disabled for a period of 3 months. Couldn't perform 4 out of 6 activities of daily living. But thankfully, due to our good medical infrastructure in Singapore, he managed to get back on his feet after that 3 months. The case in point is this: we were happy that we could help him pay for the caregiving for those months that he could not perform those activities. So that's an example of survivability, if you can call it that.
Well, David, Willis, thank you both for sharing your knowledge and experiences with us today.
Thank you. It's been a pleasure to share.
This was the first of a 2-part series on disability insurance brought to you by Great Eastern. I'm Lee Kim Siang from the Business Times. Till next time.
This episode of Podcasts by the Business Times was brought to you by Great Eastern. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.